Good afternoon. This is Paul Jewell with Hancock Mortgage Partners. This is Mtg101 Va loans. So today I'm going to talk to you a little bit about a VA loan. We'll start with the acronym VA. This is an acronym for Veterans Administration. VA loans are a Veterans Administration loan. Oftentimes veterans or active military people will tell me, hey, the VA guarantees the loan. The VA does guarantee the loan, but they do not guarantee you'll get the loan, and I'll circle back to that in a minute. What they guarantee is that as long as you qualify for the loan and you obtain the loan, if something happens with the loan, you lose your home, they guarantee they will pay back the investor. That's the guaranteed portion of a VA loan. Who's eligible for a VA loan? Active military who have served at least 181 days consecutive, retired military who also served for at least 181 days consecutive and were honorably discharged, and the spouse of a deceased veteran under the same circumstances, 181 days. The spouse would carry that benefit as long as they don't remarry. Reservists who have served for at least 6 years have VA benefits. What are the benefits of a VA loan? A VA loan allows you to borrow 100% of the sales price. So think of it this way, if your home price is $300,000, you can borrow $300,000. This is a huge benefit because most loans require at least 3.5% down, some even more. VA is 100% of the sales price. Really a great loan. What is the max loan amount? The max loan amount in Northeast Florida for a VA loan is $484,350. So you can see it to buy a really nice home, zero down. This is for single family dwellings. You can also buy a 2 to 4 unit building on a VA loan as long as you intend to occupy and use one of the units to live in. You could buy the other units and rent them out. The loan amounts are as follows. For a 2 unit, you live in one, going to rent out the other side, $620,000, $200,000. For a 3 unit, live in one, rent out 2, $749,000, $650,000. And for a 4 unit, live in one, rent out 3, $931,600 in Northeast Florida. Don't really run into that too much. Most people I work with are buying their single family dwelling. But I've done a few of these and they work, no problem. One thing that's really important is VA loans are for your primary residence only. So you can't buy a second home. You cannot buy an investment property on a VA loan. VA loans do not have mortgage insurance. So when you think of mortgage insurance, you're thinking, you probably heard the term MIP or PMI. MIP is an acronym for Mortgage Insurance Premium. That's an FHA loan. And PMI is an acronym for Private Mortgage Insurance. That's a conventional loan where you're putting less than 20% down. VA, they have what's called a funding fee. And so this is a fee that is used to offset any bad VA loans. If you are putting 0 down, so you're borrowing 100% of the sales price, and it's the first time you've used your VA loan, you're going to pay 2.15% of the loan amount towards a VA funding fee. And that's always, in most cases, all the cases I've ever worked on, is finance. So let's use a silly example. Let's say you're buying a $100,000 house. It's the first time you used your VA. Your loan amount's not going to be $100,000, even though your sales price is $100,000. Your loan amount's going to be $100,000 plus 2.15%. In that case, it'd be $102,150. If it's the second time you've used your VA loan, and thereafter, it's 3.3%. So in that same circumstance, sales price 100, loan amount 103,300. If it's the second time you've used your VA loan. What happens if you put money down? Well, it helps. If you put 5% down on a VA loan, the funding fee drops to 1.5%. If you put 10% down, it drops to 1.25. Now, a cool feature with VA loans, if you carry any portion of a disability 10% or greater on a VA loan related to your time in service, then the funding fee is 0%. You do not pay a funding fee. So same circumstance, $100,000 home, you're a 10% or more disabled veteran, the loan amount is going to be $100,000, no funding fee, 0. Also in the state of Florida, you could get a break on your property taxes. So your monthly payment's going to be made up of principal and interest to pay the loan back, homeowner's insurance to protect your home, and property taxes. In the state of Florida, if you are a 10% or more disabled veteran, you get a break on property taxes. In some circumstances, you may not pay them at all. How it works, though, is the lender, for example, Hancock Mortgage Partners, we're going to always collect the property taxes, just like you're not exempt from them or have a break on them. And it's up to you, after you close, to take your documentation, including your disability rating documentation, down to the tax collector's office and apply for that discount. Contributions. So seller contributions on a VA loan, the seller is allowed to pay your closing costs. Up to 4% of your closing costs can be paid by the seller. And in most cases, it'll cover everything. I've never run into a situation where we had a closing cost issue on a VA loan. Ratios. So just like an FHA loan and a conventional loan, VA loans have what's called a debt-to-income ratio requirement. So as a reminder, if you haven't watched any of my other videos, the debt-to-income ratio, you'll hear loan people call it DTI. Basically, it's your monthly obligations, your car payment, your credit card payments. On a VA loan, it's any child care expense you may have. And it's divided by your gross monthly income. And that is your debt-to-income ratio. On a VA loan, it's 41%. So you can use 41% of your gross monthly income for house payment and debts. Now, it's also per AUS. So oftentimes we go way over this number. And how do we do it? AUS is an acronym for Automated Underwriting Systems. As long as I put your loan into the system, even with a 50 or 54 back-end debt-to-income ratio, if I have an approved eligible, you're green light. I've closed VA loans all the way over 60% under the following rule. VA has what's called a residual income. So when you exceed this ratio and per se you don't have an AUS finding, you can still get approved for the loan as long as you meet the residual income requirements. And so think of it this way. It's what money you have left over after a calculation based on your current tax rate, and we're talking federal taxes, any monthly expenses. They even calculate like food and electricity and things and water bills. And so if you have 115% or more residual income, you can go much higher. I've closed loans near 60% debt to income ratio, as long as we meet the 115% residual income. Now this is a calculation. It's too complex for me to go over here, but I'm happy to cover it with you over the phone or in person. FICO scores, so we're talking about credit scores. At Hancock Mortgage Partners, we go all the way down to a 580. And if you have a down payment, we can even go lower. Call me, we can discuss. Most banks and credit unions are going to cap you at 620 or 640. So if you're working with a bank or a credit union and they've said, no, you cannot go VA, get yourself a second opinion, because we can go all the way down to a 580, no problem. What documentation is required? I like to talk about documentation just to set expectations. But on a VA loan, if you're out of the service, we're going to ask you for your pay stubs, your last 2 years W-2s, your most recent 2 months bank statements. And on bank statements, make sure that your bank statements show your name, bank name, and account number, and have all pages. If you're missing a page on a bank statement, the underwriter will not review it. They'll just simply kick it back and say, give me all pages. And it's got to have that information on your bank statements. Most people have online banking, and you can just pull down your bank statements and you're good to go. So that'd be what we would need if you're out of the service. If you're still in the service, we're going to need your most recent LES, the same W-2s. We're going to need the same bank statements, We're going to need a copy of your orders, and we're going to need a statement of service and a certificate of eligibility. Now, if you're retired back to out of the service, on top of the pay stubs, we're going to need your DD-214. We're going to use your discharge papers in order to order your certificate of eligibility. It's going to also show us what you're eligible for. Questions. So I've worked over 20 years on VA loans, helping active military and veterans obtain their VA loans. It's a real privilege for me to help active military and veterans. I think that they give so much. I like to give back when I can. So these are some of the questions I just wrote out for some of the people I've helped in the past. And so the number one question was, how many times can I use my VA loan? The answer to this question is super simple, is you can use it as many times as you want. If you buy a house, let's just say for $200,000 or $300,000, and you live in that house for a couple of years, and you sell your home and that mortgage is paid off, then your VA entitlement is completely restored. So you can use it over and over and over as many times you want. Just remember, you're only subject to the higher funding fee rate on the second time and thereafter use. Second question I get more than any is, can I have a co-borrower? And so this happens a lot when I've got a young couple that's, they're not married yet, but they want to go in and buy a home using a VA loan. Both borrowers on the loan, if you're not married, must be veterans or have at least served in the military or be serving in the military. So the question is, yes, young couple, not married, can do a VA loan together as long as both of them are eligible, have VA entitlement. So you can have a co-borrower as long as they have entitlement. I had one situation where I had a young man that was getting a VA loan, and he wanted to have his dad co-sign so he could buy a little more house. And it was kind of funny. I had a great relationship with him, and I basically, as a joke, said, if you're willing to marry your dad, yeah, it'll work. So it was funny. Trust me, it was funny at the time. Third question I get, probably more, in ranking of how often I get them, is, hey, can I have more than one VA loan? The answer is yes. Under the right circumstances, you could have 2 VA loans. And how that would happen is, let's say you buy your house here in Northeast Florida, and you're stationed out at Mayport, and you live there 2 years or even a year, it doesn't matter, and you get transferred, to Norfolk, Virginia. You don't want to sell your house, and maybe the timing's not right to sell it. You could, turn this into a rental property, and you could go to Norfolk, Virginia, and you could apply for another VA loan as long as it's your primary residence. Closing costs, this comes up a lot. So VA does allow 100% financing, like we discussed up here, but that does not cover the closing costs. On a $200,000 home, the closing costs are going to be roughly $6,000, $6,500. How do we pay for those? So there's 2 ways to really pay for them. One is with a really good agent and proper structure and negotiation, the seller can pay for them. So the seller can pay the buyer's closing costs. If that's not an option, the other way to do it is what we call lender credit. So I'm sure you've watched television and seen advertised free loans. I'm just going to tell you, there is no such thing as a free loan. There's not. How that's done is basically, if today's VA rate is this, and this is just an example, is 4.875%, or let's say it's 4.75, makes no difference. We can increase the rate, go up to 5.25, and now as a lender I can apply a credit that will help you offset your closing costs if you don't have any money to work with. This is how they do it. If you ever see a free loan advertised, it's not free. It's added to the rate, okay? Other than that, this has been a VA, Mortgage 101, and I hope you did get a little bit of information from this. I invite you to call me or contact me. You can reach me on Facebook. You can reach me on my cell, 904-424-7283, or you can just search for me and find me, shoot me an email. I'm happy to help in any way. And this has been Paul Jewell with Mortgage 101, Hancock Mortgage Partners, VA Loans. Hope you had a fantastic day. Look forward to seeing you again. Take care.